Right now for you at 4 o'clock, a wild showdown on Wall Street where the Dow was down today more than 600 points. Small-time investors have been putting their money into struggling companies like GameStop. That's been in the news a lot this week. It's causing larger hedge funds that have been betting against it to then lose money themselves, a lot of money. Joining us this afternoon is Eric Hogarth, a certified financial planner with Johnson Brunetti. Eric, thank you very much for being here with us today.
Thank you. Thank you for having me.
Well, I was just reading this online from the New York Times. They're saying Wall Street had its worst week since October, down more than 3%. Is this GameStop stuff really to blame for a lot of what's happening right now?
Not really. It's the news of the week. I mean, that's where an enormous amount of volatility has come from. It's a big earnings week with stocks in general, and the stock market continues to be interesting as always. Apple actually posted earnings, and they were really, really good, and the stock went down. But certainly what's grabbed the headlines this week is everything that's been going on with the short squeeze and short selling and retail investors and Robinhood, and that's taken a lot of the press, but not the reason the market as a whole is down.
Well, let me ask you, because it's very confusing, I think, to the average person. What exactly is happening here?
It's very confusing to probably a lot of the people that are invested into it. When you sell something short, right? Let's start with originally buying a stock like Apple. When you buy Apple, you hope it goes up. And if you invest $1,000 into Apple, the worst that you can do is if it goes to zero, you lose your $1,000. Now, when you sell a stock short, you're hoping the opposite is going to occur. You're hoping that it's going to go down. And this is where it gets tricky. You're selling shares of stock that you don't own. So if you sell stock hypothetically for $100, hoping that it goes down, and it goes down to $80, you rebuy it at $80, and hypothetically, you've made $20 a share. This is basic. If the stock goes the other way, which is what's happening, you can lose an unlimited amount of money because these hedge funds have to buy back the stock that they don't own. And a stock like GameStop this month went up by, I wrote it down because it was so big, 1,597% in 1 month. Now, that's enticing and that's gambling. And it's dangerous and it's risky and you can lose a ton of money.
Yeah, I was just going to say, people could really lose a lot in a situation like this, correct?
Yeah. You know, it's a common thing that hedge funds do. It's been interesting to watch because they're effectively losing at what they often do themselves. And they're losing to retail investors. And the difference with those retail investors using a platform like Robinhood, which is designed to allow smaller investors, people that are investing smaller amounts of money, to get invested into those things, it was working out in their favor. And then you have a day like yesterday, and a lot of people know that Robinhood turned off part of the trading platform, which is not good. You know, you're existing in that instance to facilitate these people. Well, why don't you get invested? Why don't you try this out? But I guess if it's going too well for you, we're just going to decide you can't do it. Now that's what happened. You know, you're enticing these people to trade, and then you turn it off and you don't let them do it. So people are upset about that.
Well, it's been quite a week for sure, quite a time for the market. It's fascinating to kind of watch this all play out. Some people saying it's, you know, these little guys against these big guys. So I guess we'll have to see what happens coming next week.
Certainly interesting. I mean, on a broader picture, we've got to remain mindful of the fact that the market's gone up a lot. If we're looking at the NASDAQ, right, where you're talking about companies like Apple and Alphabet, which is Google, and Facebook and Netflix and Microsoft, all those things, has gone up over 40% in the last 12 months. So whether you're, you know, about to retire or a young investor, be taking a look at what your overall plan is. And if you're going to gamble on things like short selling, please just be careful, because just as quickly as you can make all that money, no one's going to talk about it when they lose it all.
All right. Eric Hogarth from Johnson Brunetti, thank you so much for joining us this afternoon. We appreciate it.
Absolutely.